Hi and welcome to the Market Alert for Friday the 30th of July 2021. So the headline that intrigued me this morning is the moment Wall Street has been waiting for. Retail is all in. Now this goes back many years ago for me, thanks to Tom Williams, the late great Tom Williams, who I had the privilege of actually meeting, and he introduced me to what is known as distribution. When the stock market gets to all-time highs and the big boys start to offload to the sheep or to the weaker hands. And according to this article, we've reached this point. And if we have a look at the chart below, you can see here we've got the Buffett indicator, the composite market value to GDP, and you will see here that we are at record highs. And what the article's talking about is that classic thing where, the retailer thinks, well, the market has never gone down, it can only continue to go up, and I want a piece of the action. And of course they always get in too late, they get out too early when the market starts to fall, and then they think, well, I need to cut my losses. They get out at the bottom. The pros buy back the market in the distribution phase, the accumulation phase, and the market then continues its cycles. Whether that will have to, this next correction, who knows, or crash, because there is a slight problem with debt, whereas in the past we didn't have that. And that, again, another headline, game over, don't play again. Now, this isn't what you think it is. This is about the Federal Reserve. And you'll see here that they're speaking about Powell's performance yesterday was not an accident. He's been running on the same theme of offering absolutely zero specifics. And why? Well, I'd also like to include Bernanke, Yellen, and Greenspan in this as well. So the first of the three reasons, number one, there are none, as there is no plan. Well, I've said this for a long time. There is no plan. They just do whatever they think will work. It's that classic Einstein quote where, the first sign of madness is that you keep repeating, expecting a different result. And that's exactly what they've been doing to maintain flexibility and not be held accountable for anything. And again, that's something else. It's not happening on my watch, and hopefully I can get away with it. And the most important one, not to upset the markets because they're all heavily invested, but at some point, the butcher's got to be paid. It goes on to explain that Powell just couldn't answer any questions when they were put to him. But again, it's an interesting headline, game over. Game over for the Fed is what it's implying there. But let's have a look at the madness, because yesterday we continued to see this as the market, particularly the Dow, traded back to the all-time highs, or within reach of the all-time highs, and you can see this sideways move where the market is now in what would be classically termed as a distribution phase, where the market churns holes on the eyes. Interestingly enough, you may start to see aggressive selling at the start of the sessions during the next few weeks, where they then bring the market back. But what they've got is a situation, the pajama traders bring the markets up overnight, and then the cash market, the pros, sell off some of their stock. If we have a look at the 30-minute, you'll see from yesterday's low to yesterday's high that we've retraced overnight to 78%. So they're trying to bring the Dow back there at the moment. If we look at the German DAX, different picture. Market traded up to the 89%. This is what I was talking about yesterday. This area here is crucial. The market broke it, and it's now moving down also on the overnight here. So from this low to this high, you've got to watch the 89% on the downside here. Let me just select these and move them out for you so you can see. Just get rid of the 38 because we're through that, and the 50. Just gone through the 62, but these two here, very important, and in particular the 89, because it's also 38% retracement from here to here projected down. So very important area. A lot weaker than the Dow for the German DAX there. And also you can see from yesterday's low, we've already taken this out in the German DAX compared to a 78% retracement in the Dow. So the Dow a lot stronger than the DAX. The DAX looking very weakish at the moment. Meanwhile, economic news for the stock markets, we've got a bit this morning, 9 a.m. We've got the German prelim, we've got the core PCE from the US at 130, Chicago PMI, and the revised UOM consumer sentiment. Talking of which was out yesterday, I think, wasn't it? Let's just go back a day. Oh no, it was pending home sales. That was the one that struck me as dire. We went from 8.3 in the previous month. The forecast was 0.1. We came out at minus 1.9. So from 8.3 down to minus 1.9 for pending home sales. So the heat's come out of the housing market based upon those figures for the US. Meanwhile, the metals markets, will start off with silver. Big move to the upside yesterday. Don't hold your breath. As I said 2 days ago in the market alert, be looking for a retracement in this market to buy into it. So anywhere back to the 89% would be fine. Can't see if they're going to just allow this to run to the upside. So we'll have a look, see what we can pick up on any sort of retracement. But trading up to the 62% retracement yesterday and the 200 MA. Bit different in gold, trading up to 89% that we drew in from this high to this low, projected back. That too struggling at this area, and that's because our friend the US dollar, if I can find it, has got a bit of a bounce up because it too traded down to 78 from here to here and finding support there. So let's have a quick look at yesterday's trading session. Cock up on my part, I recorded the 1 minute chart. I was busy doing something else and had an appointment early in the morning that I had to go to, and left the 1 minute chart. I think. Let's go back to the beginning. Oh yes, this I haven't got it. I've actually chopped it out of the edit here. This is the afternoon. Or mid-morning when I was looking at the all-time highs. This is what I wanted to show you because I spoke about this in yesterday's market alert. So when I got back to the desk, I noticed the market had moved up and I was intrigued to see where we were, and we were just about to hit that 89% retracement. And so what I did was add a few lines to the chart so I could see where it was, and you can see there as I move between, and you can see the market also coming up to this point and stopping. So it's not just me that looks at these areas. Obviously the big guns do as well. So it's always worth putting these areas of resistance onto the price charts. And then as we got through to the weekly claims there, the market just trading sideways and waiting for the afternoon session, which we saw a long to start with, but the market didn't hold. And the reason for this is because the Dow at this point, if we just go back into the Dow, I'll show you why this trade didn't work out. Because we go to a 2 minute chart in the Dow for yesterday afternoon. This is where it all happened. This went to the all-time high that we saw in the daily, or just below it here, and as that happened, the DAX came into some grief, as we can see here in this bar. Lots of volume. The market stops. It just happened to be the entry price, and the Dow then came off the high, but we saw the market trading sideways, made its way back, didn't take us out, got back to the entry price or a couple of points below it before the news was released, the pending home sales, and then the market decided it would move higher on the bad news because it wanted to come back and attack the 89% in the daily chart of the German DAX, and then just drifted sideways for the remainder of the session. But in the morning, I'll have to go to the 2 minutes in the DAX to show you. This was, like I say, I recorded the 1 minute. I wondered why I was getting in and out of trades rather quickly for the small amount of time that I was at the desk, and it was because of that reason. I was on the wrong time frame. So that's the afternoon, and the morning session. We can see that the market tried to move lower, but wasn't having it. Came back 89%, and then they moved it to the upside, back to the resistance here, and then attempted to move it again. But as soon as they filled on the downside once more here, you can see them buying back into the market immediately, and then bringing the market back. It's sitting sideways all the way through until mid-morning, when prices started to move higher. Then when I came back and noticed that it was heading for those areas of all-time highs, which is on the other computer. I record on the other computer screen, not on this, so I've got two versions of the software there. So yeah, this was that area where we had the 89% in the daily chart, so definitely didn't want to go down yesterday. But overnight prices, you can see attempting to move higher initially, but then succumbing to weakness. We're currently at the previous day's low, which is really important that we hold at this level. There's a cluster of volume there. We're 20 minutes away from the futures market opening, so don't be surprised if we see a bit of a move to the upside when the futures market opens. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.